Good morning, everyone. Today's Tuesday. It is April the 2nd, and we are running hot into the job numbers on Friday. We are going up this elevator shaft as expected, right? So we are looking at 87, all the way to 2905 in my mind gives us possibilities. The probability of this moving up in really, look at this. I mean, that's parabolic, right? It doesn't have a concave nature, it's convex. And so there's a lot of price pressure that's being pushed on these charts. So it's a little bit abnormal. You'll notice waves sort of move like this if they have a little bit of concavity. If they're sort of strolling their way upward, their curve is like that. When they get very pressured, as in this case, that's the last time we can see it there. There's a little bit of it here, but it becomes convex. It's a bit more parabolic. And so that normally ends up giving us a little bit of a shake. So my thought is, you know, I am a caveman, the way that I trade, and I do look at shapes and forms and the way that motion looks when it's running in a particular direction. And this really is our first um, this is really our first convex motion that we've had up. You could argue that maybe, yeah, I don't know. I really can't argue much of anything. This might have been the last convex motion that we saw, and then it fell into a sideways pattern that continued to move up. So at the very least, this is the resolution that I anticipate. More actively, I would imagine it would give me this kind of motion, but we'll see, right? I'm not predicting the future. I'm estimating the near behavior based on present motion and undercurrents. And so that was kind of a long, drawn out thing there. But I do want to tell you that when I look at charts, it's not about levels and about there's a bit more to being a technician that is looking not only at numbers and levels, but the shapes and motions, and that is pretty important. So let's take a look at the NQ. The NQ, if we do this sort of thing here, pull it all together, it's not quite looking that way. It's had a number of things that have moved, and this is more linear than curvilinear, and so it has probably a little bit less possibility of breaking sharply, but that doesn't mean that it can't. There is technical divergence, it's just not as big. And we can see again the curve sort of looking like a regular wave. I mean, if you just think about waves in the ocean, they have this motion here. And the only time we see this is on the underside of the wave when it crashes back into the level area of support. And so I'm not saying anything about any crashes, not trying to be the harbinger of doom, nothing like that. I'm just saying this is running hot, and I think it's running too hot, and so I would be cautiously long. Is the market still bullish? Yes, absolutely. Are we going to have pressure that pulls us back to support and then tries to punch us up again? Absolutely. All of that we are likely to see. So in my mind, you either watch for the fade to go bullish, or if you chase it, you better be on a time frame tight enough to tell you when that motion is stalling out. These guys, take a look at this one. And I say this every time. Wow, I need to get to the continuous contract. So here's what we've got. We've got this wick, this tick right up here at 440. That's our next potential line in the sand, but a lot of technical divergence. And we're running into a number that may or may not be very good on Friday. I know. Yes, Anne Marie, thank you for your soothsaying right there. No, well, what I'm saying is it's probably irrelevant what that number is going to be because it's just one number, but how it sits within the frame of everything else going on might be the tale to tell. And right now, we're stalling a bit, and that's to be expected. I would say do not buy the highs. There's nothing in any of these forms that have said, hey, buy the highs. And if you buy the highs, you're not going to run any risk or any significant risk. You can look at all of these highs and watch them fade right back into a deeper support edge. This is just the environment we're sitting in, so you want to be careful there. The beast, that is oil. That's our next base that we're looking at. We can see gasoline prices, which normally are higher in this time of year, um, starting to creep up again, and OPEC pulling back. We've had flooding in the Midwest. People say that's a problem. Venezuela curbs, this, that, and the other. Well, what we are actually seeing is hedge funds saying, hey, let's get paid, moving into these bigger edges. The next line of resistance is 63.22. Frankly, if it gets all the way up there, it might get back up to 66. Who knows? But this is what we are looking at. And this one also giving us a little bit of a warning signal in terms of, wow, that's a lot of heat. Watch for a fade to come into a higher low to allow you to participate. Notice this noise here, pretty aggressive in the motion down, and we're staggering our way up. And so this is the next area we look at. So watch for it to come back into support before you jump in long. If you have been long, I'd say this is one of the premium areas to begin to take a little bit of profit if you've had the cool hand Luke there and you haven't taken any gains out of here. This is certainly a time to do that. Gold is sitting at a baseline of support. It was sitting here yesterday and it's sitting here today. It's broken down just a bit. It's sitting in the neutral zone. But if we've got the market on the other side that's fairly hot and we are looking at these guys at support, it could be, they move back into the regular relationship. When gold is up, markets are down. When gold is down, markets are up. And we are seeing that in general here. So you know what? We'll see what happens as I hiccup there. Pardon me. If not, we head down into these lower levels. All right, that's it. Pay attention. It's going to be very interesting over the next couple of days.